It's now on the markets. Stephanie Link, Chief Investment Strategist and Portfolio Manager at Hightower Advisors, as well as a CNBC contributor. Good morning, Stephanie. We saw you recently, but a lot happened, obviously, transpired since the last time you were on. You think that if a Trump presidency was more likely, there are certain parts of the market that you could be expected to do better, some that could perhaps do worse?
Well, sure. I think it's more like pro-business. I think cyclicals will probably do well. Real estate, for obvious reasons. The defense industry certainly should get more support and probably lower taxes, but that will depend on Congress and the mix of Congress. And it's too early to say if there's going to be a sweep or not. Personally, I think when, just stepping back, if the market, what they like to see is actually a mixed Congress, because not a lot gets done, unfortunately, but that's what the market likes. We don't like surprises. On the negative side, you have tariffs that will likely come. You have probably more drilling, so energy probably takes a hit. And also anything tied to green or clean probably also would be weak, although I think a lot will depend on various different policies that have been put in place. A lot of the Republican states are benefiting from green and clean, so I'm not sure anything really gets done. Yeah. But there's a lot of moving parts, Joe, as you know. Yeah.
I kind of like how you said not a lot gets done, unfortunately. Some people think a little too much gets done sometimes, and that turns into a problem. It's still, we're still right in the middle, smack dab. I don't even know what that comes from, smack dab. But we are smack dab in the middle of earnings season. Do you know what it comes from? I always have a curiosity for it. I'm going to look that up. Anyway, what's coming this week that's important?
Well, I think the banks obviously are front and center. And I will say that they always trade really crummy around earnings because there's a lot of moving parts. But I actually thought the numbers on Friday were pretty good. I thought JP Morgan, obviously, the clear standout. Wells Fargo's having some problems. It's an expense story, and expenses were higher. So that's a problem. But the theme is fees. Fees are up enormously, right? So you had JP Morgan, their fees were up 50%, Citigroup up 63%, and even Wells Fargo had a broad-based fee growth across the board. If you talk to the CFO, he was talking about cards and trading and wealth, all fees higher. So I think that bodes well for Bank of America, bodes well for Morgan Stanley and Goldman Sachs as well. So I think that the banks are a buy here, Joe, on the weakness from Friday.
The 10-year, should the yield be moving higher on tariff concerns? Why isn't it?
I don't know. I mean, I actually thought that yields would be down a little bit just on the uncertainty. But what I will say is I'm actually very encouraged that you're seeing a little bit of a steeper yield curve. That's a good thing in my mind, because we've seen the inversion for over 2.5 years, and that was supposed to be the precursor to a recession, which we never got. So I actually think the steepening of the yield curve is a positive for overall equity markets and risk-on assets as well.
And September looks like the first cut to you, unless something really crazy were. And you know what? I don't discount anything crazy anymore, but probably nothing before September. But you're pretty sure September we get a quarter point cut?
I think we do. I mean, look, we're slowing for sure, right? We grew 3.4% last year, all of last year. That's huge growth for the economy. Now we're running at about 2, maybe 1.5, 2. So we are definitely seeing a slowing. Higher rates are certainly having their impact, and the fiscal stimulus that was put in place is starting to wane a bit. But still, 2% growth gets you about 8 to 10% earnings. And I think that's pretty good for the overall market as a whole. In terms of rates, sure, I think the inflation, we've definitely made progress. We were at 9.1% in inflation at the peak. We're now at about 3, maybe a little less than 3. We're getting there. And it certainly sounded to me last week that Powell was more dovish and more willing to focus not only on inflation, but also the labor market as well. So I think we're in a good spot.
So if you were to get way down in the weeds, have you ever seen anything happen during a convention? Would a outlier VP pick could come as early as today. May not be an outlier, but could that ever affect what happens in the stock market? Usually not, I would think.
Probably not, but I do think it's interesting that Nikki Haley is speaking at the RNC this week. That was kind of a surprise. DeSantis is as well, but I think a more moderate VP could certainly help broaden out the support in terms of from the political side. So we'll have to see, but I don't think it'll make a big difference on the market side. And
then finally, you're not a big crypto fan necessarily. What's that move? For that to move 10 or 15%, you don't even need a reason, either up or down. I don't think, do you?
It's hard. I mean, it's like it doesn't really trade on fundamentals, but it trades on risk-on assets, and that's why you have the market up today. That's why you have Bitcoin up today. It kind of all makes sense. It's consistent, but this is a kind of a pro-business, pro-risk-on rally. And so we'll take it. We take green any day, right?